The long-term trend of gold and silver is strongly up. So Basel III is now, the latest, of course, I don't know, is that by the end of June, all European banks and for UK banks, end of December this year, paper gold is not, it doesn't count as a reserve asset anymore. So basically, and since the banks hold massive amounts of paper gold and silver, for that matter, they now have to reduce the balance sheet and the risk of that. So maybe that's one reason why we are seeing gold coming down a bit, because they're pushing it down in order to buy it cheaper, and they're selling some of their paper gold also. But my view is, and a lot has been written about this by many people about Basel III. My view is that it's already in the market. It's been in the market for a long time. It is not news, and we are almost at the 30th of June. If they had liquidated all their paper assets, gold would have been a lot lower. So I think it's going to be fudged for a while, and the transition period is going to be much longer than people realize, because they cannot overnight just change these positions. And also the fact that the timing is interesting, because both India and China are currently buying very little gold because of their internal problems. That is one of the reasons why gold came down, because there's been purchases come down from these major buyers of gold. But that's often the case, that when you have a reaction in gold, it coincides with something happening in the market, like in the big buyers of gold, China and India. But let me say that this is a correction in gold that I have been expecting. It was a typical correction from the big move from in March, from 1700 or under 1680, whatever, up to 1900, a bit over 1900. So we have seen a typical, if you call it technically, we call it a 62% Fibonacci correction, which is a typical correction. That's taken place now. I think is almost finished. The long-term trend of gold and silver is strongly up. We've been in this market for over 20 years. And my view is not changing. To the contrary, the governments are absolutely assisting us in every major way in debasing the currencies, and therefore making the precious metals more interesting than ever. The market is telling me, technically, that the next up leg is going to start soon again, and that's going to be a strong up leg. And therefore, we will get the news that is then going to be blamed or credited for the next move, whether that is Basel III or whatever it is. But there is always a catalyst for things happening. But markets move in the much longer cycles. They're not moved by short-term Fed decisions or Basel III decisions. They're moved by a much longer cycle. And the longer cycle is telling us that that we are in for a very, very long, strong move of the precious metals, for the simple reason that paper currencies are going to continue their debasement for a long time. Central banks were meeting, and the whole system was seconds from collapsing. So they managed to extend it for a few years artificially, but now it's going to come back, and it's going to come back with a vengeance. And so it's be a lot bigger and a lot more difficult for the world here. And so he's right. We're going to see the mother of all crashes. I'm not a pessimist. Remember that, I'm not a pessimist. I only evaluate risk and what's happened in the last 10 or 20 years. He has a good nose for this. I'm sure that the risk is there and that it is going to happen. So please be prepared. As we always tell investors, be prepared.